right, how we doing, guys? Sam here with you on Friday, October 26th. I'm kind of middle of the day. Now, I know normally on a Friday we'd be reviewing Bitcoin. But since Bitcoin is just essentially dormant and is just going sideways, I thought might be more interesting to just put out a random poll to the members and let them choose any asset. So traditional or crypto, and we did some polling. And first up, so we have one traditional and one crypto that we're going to go through today. So first up by request was a look at crude oil. Now I have some traders that will trade this via Forex account on they'll use the CFD. I'm looking at it here on the futures contract. That's how I would trade it. But they're going to be very, very similar. So the technicals will be almost identical. They may be 20, 30 ticks apart, but they will be very, very close. So the technical analysis would apply to either. So here I said I happen to have a count on this. So as I look here on our daily chart, you can see, as I'd like to remind you, when Elliott is most useful is when it's so obvious you literally can't miss it. So it's pretty hard to miss that five-way structure coming down. Now this is a monster move. Right? That's when we start this at 112 and we go to 25 and a half. And that's, you only need one of those to a career to have a very successful career or a very successful trade, right? That's some big money made there. Okay, but let's just go through this here. So we've got a clear 5, and then it looks like this is some sort of a 3-wave to correct it. But yeah, right, we're going to get to the hard rate edge, but it's always a good idea just to see how technically the market's trading. So if I look here, just standard ops, we'd take the 2 through the 3, right? Get it right on there. All right, so 2 to the 3, where are we looking for the 4? Right between the 23 and the 38. That's our high probability zone. Note here we get just in the lips of the Vegas wave. Just so good. So right, just standard, right? Length of the third. Here's our 4. Where's our target for the 5? Down here. Here's our algo target. All right, so I mean, doesn't get much better than that, right? I don't know what more I can add to that. That's, again, I don't know how many times I've shown that. It's more times than I could count. So we have some sort of a 5-wave sequence that has completed. Now, interestingly, if I just leave that there and just pull down to the new low, well, look what we've just done. We've just gone into the golden zone. But it's kind of a judgment call here. So I know an algo is going to use the dominant. So if I come back here to the last high before we went down and connect those two, we're not quite to it. So a break of this, we were to get up to 84, 67, 8 in that range. We get a solid break of that 65, we'd have a pretty substantial trend change. But right now, whether you're just leaving it here or no matter how you slice this, we still have the potential for this 5-wave structure to be correcting. Now, right, basic Elliott 101, we trend in 5s, we correct in 3s. So there's a contender here as a completed correction of this 5-wave. So to break that down a little bit and just go through it with you, I think we can do it on an 8-hour here. So if I open that, now I've got log scale. We don't need log scale. All right, so here we can take a look at this. Now so coming off of this 5 low, so we're anticipating a motive wave. We'd be looking for the A wave. So we do get, it's just barely qualifies. So the extension's in the 1. So if we look at the length, remember 3 does not have to be the longest, just can't be the shortest. So I put that there. Let me switch back to, getting ahead of myself. So let's go back to our traditional 8. So here's the 100. It just barely misses, right? So this pivot high is 24 and the 100% was 68. So, and I'm just comparing the length of the 3rd to the 5th so I can confirm that I have a good contender here for the A in that the 5th is shorter than the 3rd. So I'm fairly confident in that count. So the 1 is the longest, 5 the shortest. Remember, 3rd doesn't have to be the longest, just can't be the shortest. So I've got a leading diagonal into my A wave here. And then it's some sort of a odd, right? So I've got an 8-hour here, so you're not going to see all the nuance in here. But it looks like I've got a leading diagonal into the A wave. I go into the B and then come down here for my C. So I get an A and a B. And then it does get a little tricky on this C wave here. So I do get an impulse, right? So the larger degree here in blue, I do get an impulse, but I finish that impulse with an ending diagonal. Pretty classic example. So ending diagonal, we're looking for 3, 3, 3, 3, 3. So if I open that up even just a bit more so you can see it, I look here. So here's my 4. So coming into my 1. So I get an ABC into my 1, down from my 2. I get this very complex, right? But pretty well defined ABC into my 3rd. Now I come down ABC into my 4, and it looks like I finish ABC into the 5. So I've got an actually textbook ending diagonal. Now, a couple of things in a diagonal that we always look for. We're always looking for a technical pivot in the 4, of the 4 to the 5. So if I grab my retracement tool and just take the start, remember it's always the start of the 1 through the pivot of the 3rd. Right, and you can see here we come just get a couple of toes into the golden zone and then rip higher, and we get this ABC. Now, interestingly, it doesn't, if I take that low, right, and I get up here, right, look what we get here. So it comes gold. So you see how we do it twice? So here's the larger golden zone of the larger diagonal. Then the A into the B goes also golden zone. Here's that target, gets second target. Now, the larger one is denied, right? We don't get there. As I will remind you, just because they're there doesn't mean they must be realized. It must be hit. So, but this is, I thought it was interesting. We have golden zone, right, back to back, almost identically. Right, just a couple of ticks through it. This one gets second target. They don't quite get third. So we have the larger one denied up here. So if I pull this apart now, one thing additionally that I thought was worth noting, we look here, we get a perfect channel on this. So if I grab this low here, and I start here at the beginning of the 1 wave. Pardon me. I would take the beginning of the start of the 2 wave, and I would go through my 4 here. Right, and then I pull up to my 3rd, right on there. Well, look how that, if I pull back out on that, look how nicely that frames this ending diagonal, right? So here's the 2 to the 4, here's my 3 to the 5, so I have almost just a textbook ending diagonal. Now, interestingly though, this channel has held it, so we've yet to have the break. For this to officially, for us to define this as the pivot, we're going to need to break out of this channel. So if this ABC is indeed complete, which I think is more probable, we'd be looking for this to come down. We're looking for some sort, now it could pivot here. We'd be looking for some sort of a motive wave, could have a diagonal. We'd be looking for some sort of a motive wave coming off of the 5 of C, if that C is complete here. If we have this correctly identified, then this first move here, the fact that we pivoted here, may just be the setup for the 1-2 of what would be the larger 1 wave coming off of that correction, right? So we've corrected, we've got an ABC. We're anticipating now a motive wave coming down, right? To carry on with the larger degree trend, which is down, right? We have so again, if I pull out here, right? We trend in 5s, we correct in 3. So this being the 3 that is potentially now correcting that big 5 that went down, right? So this would be the start of that. Potentially that's just the 1 wave getting started, but we can't really confirm. First we need to break out of this channel. So if we were considering that as a possible 1, and we just take it here, well, we'd be looking for some sort of reaction here between the 50 and the 618. All right, that's our prime zone, and then a push down here if we're going to get a full Elliott count. Right, we're going to get a true wave 3. We'd be looking for that. We know to our shorthand we can use the -100. So if we were going 1, 2, 3, that'd be a reasonable target for the 3rd. 4 and the 5 confirms that we're just carrying on with that larger trend, which is lower. So a little bit early for this. We've got to get the break here, but that would be of note. Should we break that and close below it and hold it, that would suggest that we're starting down into this 1 wave or motive wave, whatever it ends up being. So in terms of where's the opportunity, I think the next trade is the retrace here off of this. So note here how we get the center line of this channel right connecting in between the 50 and the 618. So as far as I'm concerned, the next opportunity here is on the short side. If this is going to continue to retrace, I'd be looking for that sell opportunity in that hot box there between the 50 and the 618, looking for that. So if you think about risk reward, and again, doesn't matter if you're trading this on CFD or trading in the futures contract, the advantage of the CFD in a Forex account is that you don't have to carry so much margin, right? So you can trade a percentage. So you can trade micros or minis or a percentage of a full. So if I look here and let's use the median line, the center line is what I should say. as we're looking at a channel, I get on the other side of the 65, and I come down here for my wave 3 target. What do we get there? All right, so that's almost 12 to 1. So I'd be looking here, if I were, I'm on an 8-hour here, so I might have if I divide in half the total position I'm comfortable putting on, I'd have half of it at the 50 and the other half maybe at the median line, splitting that difference, right? A stop on the other side of the 65. So it sets up an awfully nice setup here, right? Reasonable risk reward. If we're going to get full target down here, that's 12 to 1. All right, so not bad. Now, so what I thought we would do here, since that we can analyze that and say, okay, that's great. Well, what if you're just like all of this Elliott stuff is just too complicated, and you're like, what? Wait a minute, what, a 3-3-3-3 ending diagonal into some sort of I guess what I'm trying to suggest is that if you for whatever reason, you're uncomfortable with Elliott Wave, you don't have to use it, right? So here I've just shown you how I can use that rule set here to be advantageous, to help me organize this move relative to the prior move and create some probability zones and some reasonable targets. All right, so that's the advantage of Elliott Wave, is that we organize the chaos, we put it into pattern, we look for these probability zones. And that allows us to identify when we're wrong, i.e. if this were to continue to, if we got to bounce off of this and we're going to continue higher, then obviously this count is, I've got it wrong. So that's the benefit here, but I guess I'm trying to use that as a segue to look at this with through another lens. So for whatever reason, if you just can't get your arms around the Elliott, let's see, I think I have it. Do I have it here? Well, I wanted to show you this on the CFD. I might have it over here. I've got one of these. All right, so here it is. So now I'm using USOIL. So if you were trading this through an FX account, you can see it's almost identical. All right, and it's, again, if you have just even rudimentary understanding of Elliott, just the most basics, in that we trend in 5s and correct in 3s, right? Well, you don't have to get into all the nuance of an ending diagonal, finishing. That you don't need to do all that. You could just say, all right, well, can I see a 5 wave? Well, I got, again, hard to miss that. Well, let's approach it with our GAN tools, right? And this is, members will know, right? This is something that we've been featuring here as just an alternative way to approach the market. If you're on YouTube, well, some of this may not make sense here. We've just done a whole training on this, but let's just kind of go through it here as I would if I were analyzing it using my GAN tools. So first thing I see here is I've got a swing, I've got a retracement or a rotation, then I've got a target. So if I just take the length of that swing, which is kind of an easy way to do this. So if I just take the length of that swing, now I'm just going to use my GAN expansion tool. So I'm going to go here, my GAN APPs, we know that's going to be, whoops, sorry, wrong one. I want my expansion. I want my GAN expansion tools. All right, so here we go. So we get our 0.125 and our 0.25. All right, so again, it's not a function of where we pivot here. It's simply I've got a swing. If I'm going beyond this low, I'm getting targets. Well, note the 0.25 gets it to the tick. All right, if we put the traditional on this, and I retrace, oops, sorry, wrong one. If I put my traditional on here, right, note what we get here. So here's that high probability zone between the 23 and the 38 where we're looking for the 4. Now look how they overlap. Right, so thus you can see the benefit of then why this algorithm is so pervasive in the market. So the GAN and the Elliott give you the same target. Actually, GAN gets it to the tick, the minus 23.6. They got through it by a couple of ticks. Right, not that you're going to care too much, right? If you got that target right off of this or the break here in terms of where are we going. Right, so that all very good. So let's think about coming back up the other direction. All right, so if I'm looking at this now and I'm just going, I don't know what the Elliott count is here. What else can I do? Well, the first thing I'm going to do is I'm going to go to my wolf range, and I'm going to use this. So I'm going to get my wolf range on here and see if I can identify the range in the market. So with that here, so I look here and I see coming off of this low, well, I would do a couple of things. So first thing here, I'm looking, okay, so I pivot right here. Maybe something here. Oh, look, there we go. All right, so look what we get here. All right, so here's the first major swing that I get up before I get a retracement. So the idea in the wolf range is we're looking for the range of the market. So we put that on here and say, do I have the range? Well, note here, we come down to the 50, then back to the top of the range, then we get to the minus 50, hover, we get through it, come back to this as support, and ultimately we get to the negative 100. So all we have here is range expansion. Get that right on there. So we have, this is the initial range. Here's the expansion of the range. We've gone to almost a couple of ticks shy of exactly 100. But here's the point of it, right? So here's the 50. So the idea, the reason we do the 50s here, it's a good kind of a shorthand way to do it without going through all of the Gann retracements. So I'm not going to miss any 50s, right? So I'm trying to range the market. Here's the minus 50, minus 100, 150, 200. So I think you get the idea. So this looks like a good range. So from that range, I get to the 100. So next, if it were going to continue higher, then this would be the new range, right? This would be the 50, and then we'd have the negative 100 way up here. So if that's going to pivot beyond the 100, whoops, where was it? Right here. If we're going to pivot beyond the 100, well, then these would be the next targets we'd be looking for. Right, so kind of interesting here. We get that so well, so let me get that right on that. It's actually to the tick on the futures. It's a little off on the CFD, but not by much, right? So looking here, from that 50 is spot on. Then we get the negative 100. So what else might I do? Well, if I'm thinking of this with my Gann hat, let's get this auto. Right, so first thing I'm going to do is lock the scale and see how, let me get my scale locked. Right, this looks like a reasonable spot for a Gann box. So I'm just going to grab my box, come down here to this pivot. Now, I'm going to, as I've shown you before, I'm going to use this, since I've got the range of the market, I'm going to put this first line of that Gann box right on that first pivot. Get it right on there. There it is. Okay, right on there. So you can see, so it just, for those of you just trying to review this, or if you're not familiar with this, the idea is we're squaring price and time. So here's my square. Right, do you see that square? Right, now the 1 by 1 cuts that right into the corner. Now look what we do up here. Right, so you say, oh, that's random. Maybe. Look what we get here. So here's this split in time. So we're getting a perfect confluence of price and time there. Right, so we have, here's the range expansion. Here's 100%. Here's the 1 by 1. As we hit that. You think that's random? I assure you it's not. Right? There very few times does anything happen in the markets that's random if it's a significant pivot. So that has certainly the potential to be a significant pivot. If we're heading down, right, where's the next support? So this will be interesting. Are we going to continue to ping pong? All of these will be points of interest if we're going to continue to move lower. So next target, of course, would be, so if you drew it up now and you said, okay, if I've got new range expansion, if this is my new range, right? Look what we get here. So here's the low end of that range. Now I'm expanding the range up. So if I'm going to come back down, where would be, so depending on when I get there, right? When do I get there? Right, if I come here, if I'm going to take my time, hard to say, right? But this would be an area, depending on when we get there, that would be of interest. So now we've got my 2 by 1. So if that comes down here, I might look at this and say, well, wait a minute, let's put the full Gann retracements on this. So from the swing low to the swing high, right, if we get the full Gann set on here, all right, put these in that color that stands out. So here's the 37. Right here, here's my 50, right? We know that's going to be a 50 because I've expanded the range. We're not going to miss a 50. So this area here would be of interest depending on what kind of time frame it takes to get there. So we might have something come down here. I guess I've got to add to it. Come here and then come down here. Something like that would be ideal. So again, you don't have to turn your mind off to the idea that we're trend or we correct in threes. So if we see that kind of pattern coming here, that would be of interest. Right, here's 37. If we break that, where's the next level of interest? At the 50. Again, there's a time component here, which is one of the advantages of a Gann fan here is we get this time element. When do we get there? Right. So here would be the first spot that I'd be looking. Right, so we've essentially come down. We're starting to test that. So I think you get the idea as to where we get there. But this is not insignificant. Right. That is significant. So you have the potential for a significant top there. Now, I thought this was worth noting here. In conjunction with that, let's go back over here real quick. I think I forgot to show you this. All right, so you note this channel that we have here. So we can't forget about our favorite Pitchfork. So, well, let me show you this first. So first, when I look at that, I can just look at that and say, well, man, if I had a traditional Pitchfork on this, I'm going to split that difference. Looks like I'm going to be too far. So if I let me show you that. So if I put the original on it, let's go to original here. All right, so let's come down here. Here's my low. Here's my second pivot. All right, here I go. All right, so note what we get here. So let me get the full boat on here. All right, so let's go back to traditional here. All right, because I meant to show you this. All right, so here, note what we get here. So here's the corner pocket trade. Now, we don't quite make the 50 on this, so we have a corner pocket, right? And we're far from a golden, but we do get a corner pocket. So if I put this on here, right? So here's the corner, right? 80% probability, right? As I've shown you, I don't know how many times. Highest odds in trading. If this pivot holds, that's the key. If this pivot holds, we have an 80% probability of making the median line. Right, we make it there, hit it again, hit it again. Now here we just fall just shy of it. Is this the tell that we can't get to it again? It was a sign of weakness? Potentially, but the point I wanted to make here is that the 80% has been realized, right? It was realized right there. Okay, so there's your classic corner pocket. Just happened to be, we got a little bit beyond the algo target and ultimately got up here to second target as we were tagging it yet again. All right, so let me pull that off here. Now, additionally here, I'm going to take this off here, so I've shown you that. What I thought was interesting, let's look here. So if I go here to here, now there's an example where I'm too steep. So if I was looking there without all of this additional information, I'd start checking on modifiers. Well, shift pretty close, modified shift. It looks like shift is better here. So in shift, all I'm doing is shifting over the median line 50% in price, right? Doesn't quite get there. So I would look at it this way as well. So we go here, like we looked at the traditional. All right, let me get that up here. So we've got modified shift. All right, so you see the first one got it to the tick. Now here's modified shift. So interesting, we're coming here, so we continue to be tagging the median line here. We've got through the upper channel, but we come back down here and see how the median line seems to be offering some support. We'll see if that's going to hold because we'd be anticipating this coming much lower. So as I was showing you before, if we come here, we're going to go down to third target. We'd be breaking this lower parallel. Depending on how long it takes, note the first algo target might get you. It depends on when we get there. But this is what we're after, right? So nice containment of that market, right? First one got it. Just wanted to show you that. I meant to show you when we were looking at the Elliott count. So coming back over here, so you've got this combination of Pitchfork and median lines in conjunction with the Gann angles and what we showed over here. So again, if you don't want to have to go through all the nuance and go through that process of learning how to identify what's happening here in the rule set and the Elliott stuff, you can simplify it here and work with these Gann tools. Pull this off here. Work with these Gann tools and identify these significant pivots here. That is not insignificant. Right? Technically speaking, that's a contender for a major pivot. So the push down would not surprise me at all. So I think that's one to make note of here, that could be a pretty significant pivot here in Crude. All right, so with that, I will wrap there. So I've got a few, let's see. Yeah, we got one more we're going to do. We'll look at crypto here as well. So by request. All right, so with that, I'll be back to you shortly with a look at Cardano to Bitcoin, I think it was. All right, guys, talk to you.